Welcome to Heart of Economy. Today, we're diving into a major development that's sending shockwaves through the world of finance. Tech stocks are surging to new heights again. But behind the rise, it's not just success stories. The data shows that this really is starting to look very familiar. Do you remember the dot-com bubble of 2000? What we're seeing today shares almost identical dynamics. In fact, some indicators suggest we may have gone even further than back then. So what does this mean? Is another crisis looming? Or is this time truly different? In this video, we'll explore the answers to these questions in depth. Not just what is happening, but what could happen. Let's get started. First, let's take a step back. Back to one of the biggest financial bubbles in history, the dot-com crash. In the late 1990s, it was all about the internet revolution. Everyone was talking about the new economy, the digital age, and infinite growth. Any company with .com in its name was getting million-dollar investments, going public, and watching its stock prices multiply within months. Here is the strange part. Most of these companies were losing money, but it didn't matter because what mattered was buying the future until the bubble burst. And it burst hard. In just a few months, the Nasdaq lost 78% of its value. The S&P 500 dropped by over 50%. Hundreds of thousands of investors lost their fortunes. The US economy was shaken, and fear replaced confidence. Now, let's return to the present. It's 2025. Tech stocks are once again at record highs, but this time, the equation is far more complex. Why? Because at the center of today's rally we have artificial intelligence, chip manufacturing, and the semiconductor wars, a surge in the M2 money supply, and a shift toward protectionist US trade policies. That's exactly why some experts are now saying this bubble may be more cleverly packaged, but it's still a bubble. Let us share a striking data point. The valuation of the Nasdaq 100 index relative to the M2 money supply has now reached the same level as it did at the peak of the dot-com bubble in 2000. What does that mean? Yes, M2, the total money supply in circulation, may have increased, but tech stock valuations have risen far beyond even that. So the surge can no longer be explained by liquidity alone. In other words, markets are now at risk of disconnecting from economic reality, just like they did in 2000. Let's look at a few examples. A data company that's grown quietly for years. It was under the radar in 2023. Then, in 2024, it integrated AI into its products, and by 2025, it exploded. Defense contracts, government projects, AI-powered analytics software. The result? Its stock price surged nearly 200% in 1 year, but its revenue growth during that same period? Only about 30%. So, the price is way ahead of the actual growth. And this isn't just Palantir. NVIDIA, AMD, Broadcom, ASML, Snowflake, Meta. Many tech giants are showing the same pattern. Skyrocketing prices but limited fundamental growth. Which brings us to a critical question. What are investors really chasing? Actual profitability? Or another shiny dream? Some experts argue that this rally is inflated by AI hype, but so far, there is little real revenue to show for it. Many companies are still in R&D, building reserves, or testing products. Even in the brightest moments of this bubble, most of the products are still in the lab. Now, let's shift to the geopolitical side of the story. Just recently, Donald Trump made a bombshell announcement. We are imposing a 100% tariff on all semiconductor and chip imports, but this tax only applies to companies manufacturing overseas. Firms committing to US production, like Apple, are exempt. What does that mean? Global supply chain is about to be shaken again. iPhones, MacBooks, servers, AI chips, production costs will rise, That increase will hit corporate balance sheets and then stock prices. So how will investors respond? Historically, we know this. Markets don't like uncertainty. And right now, there's plenty of it. Now, let's hear what some of the top economists have to say. Jeremy Grantham, in early 2025, stated, "This is the second great tech bubble I've seen in my life. The first one popped. This one might too." Michael Burry, yes, the guy from The Big Short, issued warning on Twitter in May. AI hype, 1999, internet mania. Expectations are way ahead of reality. Be cautious. Cathie Wood, on the other hand, is more optimistic. This time, we have truly transformative technologies. We are standing on much stronger ground than in 2000. Even the experts are divided, and isn't that alone a sign of elevated risk? So what should we do? As investors, what questions should we be asking? Ask yourself this. What's driving these stock prices up? Are these companies actually making money? Is there enough real growth to justify these valuations? And most importantly, is this excitement sustainable? Yes, the world of technology is incredibly exciting again, but it's also extremely risky. What we are seeing today might not be exactly like the dot-com crisis, but it's also not a healthy, risk-free rally. Every rally is an opportunity, but remember, every opportunity comes with a risk. In this video, we've taken a deep dive into the critical state of tech stocks. We compared it with the past, backed it up with data and real-life examples, and looked ahead to the future. If you found this video helpful, like the video, share your thoughts in the comments, and don't forget to subscribe to Heart of Economy. We'll keep exploring the most urgent, most relevant, and most fascinating topics in the world of finance and economics together. See you in the next video.